How a winning streak creates a false confidence. You've just closed 3 winning trades in a row, you open the chart again, and it feels like the market is speaking more clearly than ever. Areas that used to look risky now seem straightforward. Your decision-making feels faster, your fear feels lower, and every small move in the price looks like a fresh opportunity. That's exactly where the danger starts. After a few consecutive wins, many traders think they've entered a mastery phase, when in reality, they may have just entered a phase of carelessness. A few winning trades don't always mean the system has improved. Sometimes it was just a good market phase. Sometimes luck was on your side, and sometimes the market uses that extra confidence to take back the very next trade. In this video, we're going to see how false confidence builds up after a few winning trades and how to stop a couple of good wins from becoming the start of a losing streak. Part 1. Healthy confidence versus false confidence. Healthy confidence means you know why you entered, why you exited, and why you're ready to make the same decision again if the same conditions appear. False confidence means you assume that just because a few trades work, your next decisions are probably right too. The difference matters a lot. A professional trader asks after a win, "Did I follow my plan correctly?" A trader with false confidence says, "I've got this market figured out." The first mindset stays focused on process. The second mindset is focused on the feeling of being a winner. The problem is not the profit itself. The problem is that after a few positive results, the mind often overrates the quality of its decisions. A trade might have worked because of luck or a friendly market phase, but the brain quietly assigns all the credit to skill. Part 2. What are the signs of false confidence? The first sign is that you become less strict with your own rules. Before, you needed several conditions to line up: a clear zone, confirmation, a logical stop, and a solid risk to reward. After a few wins, you start saying, "This setup isn't perfect, but it looks okay. I'll take it." The second sign is an increasing size without a real reason. Not because your account has grown according to plan, not because of long-term stats or backtests, just because you feel on point right now. The third sign is trading more often than usual. Maybe you used to take 1 or 2 trades a day, but now every small move looks like an opportunity. The number of trades goes up, but the quality goes down. The fourth sign is that it gets harder to admit you're wrong. With rising false confidence, traders are slower to accept a bad idea. They move a stop, search for new reasons to stay in, or hold a losing trade, hoping it will come back. Part 3. Why are back-to-back wins so dangerous? Because the human brain takes recent results very seriously. When you get a few wins in a row, your mind quickly builds a story. "I've improved, I understand the market better, now's the time to size up and get serious." Maybe you really have improved, but a handful of trades is not enough proof. In trading, short-term results are not always reliable. A bad decision can still produce a profit, and a good decision can still produce a loss. That's why a professional trader doesn't get overly excited after a winning streak. They ask, were these profits the result of following the plan or just the market being kind for a few trades? Without that review, a run of winners can be more dangerous than a run of losers. Losses usually make traders more cautious. Wins often lower their guard. Part 4. The big mistake: changing the plan in the heat of the moment. One of the most common things that happens after a few winning trades is that traders start changing their plan at the last minute. Maybe until yesterday, they were risking 1% per trade. Now they say, "If I'm doing this well, why not make it 2%? Or they used to only take very specific setups, and suddenly they added a few half-baked patterns to the system. Even worse, they start trading markets they barely know just because they feel like they can't read anything right now. These fast changes rarely come from a deep experience. They usually come from the emotional high after the winning. A trading plan should change because of data, journaling, backtesting, and performance review, not because a few recent trades felt good. Part 5. How do you keep a false confidence under control? First, slow down after a winning streak. You don't need to be afraid of the market, but you should assume your mind is probably more optimistic than usual. A short break, some journaling, and a fresh look at the chart can block a lot of impulsive entries. Second, ask yourself, if the previous trade had not been a winner, would I still take this setup? This question is powerful. If the answer isn't a strong yes, your judgment is probably being influenced by earlier profits. Third, change position size only according to your plan, not your mood. If the size is going to increase, there should be more clear reasons: account growth, stable long-term performance, enough testing, and a defined risk rules, not just "I've had a good run." Fourth, after each win, rate the quality of the trade. Give your execution a score from 1 to 5. Did you follow your rules? Was the stop loss correct? Was the exit logical? Was the size appropriate? This shifts your focus from "how much did I make?" to "how well did I execute?" Part 6. Summary. Confidence is essential for a trader, but once it disconnects from data and from the plan, it becomes a risk. A few winning trades can be a sign of good execution, but on their own, they do not prove that your system is flawless or that every next decision will be right. After a winning streak, the most important thing is to remain the same disciplined trader you were before the profits, the one who calculated risk, waited for confirmation, and didn't trade every single setup. The market usually brings an overconfident trader back to reality very quickly. The trader who stays humble and systematic even after a series of wins has a much better chance of growing over the long term. Thanks for staying with us to this point. If any of this sounded familiar, you probably had at least one moment where after a few good trades, you went back into the market with extra confidence. Now tell us in the comments. After a string of winning trades, do you follow your rules more strictly or do you start bending them more easily?